What up? It's your boy Kumbo, and we are back with another episode of Playing in Kumbo. I'm here with Nico. He has recovered from COVID.
Yeah, I'm back.
Welcome back to the boy. So today I'll be talking about the tax-free savings account.
And I'm just gonna run through the process of, the administration of an estate when one dies, and just, letting you guys know actually why it takes so long and why it's important to get your stuff in order. Remember, none of this is financial advice, legal advice, professional advice in any capacity. It's all just information, educational, and then just like, subscribe, share, comment, nice things, I'm definitely COVID negative, so don't say nothing about that.
I wouldn't be here without a mask if you were still,
Yeah, I did my, how many days? I did more than 10 days. I did like 14-day quarantine, in my quarantine quarters.
Yeah, some nice quarters, I won't lie. Men are living good. Right, so a tax-free savings account. Now basically, this pretty much works the same as your normal investment account, whether you invest in an ETF, which is an exchange traded fund, whether you buy shares through the JSE, or whether you invest in a unit trust. The investment account, so a normal investment account and a tax-free savings account use the same vehicles. The only difference is with a tax-free savings account, you don't pay tax on the dividends that you earn or the interest income that you earn. Let me try to give a practical example. You have an investment sitting at a value of 1 million rand and you earn 50,000 rand interest in a tax year on that investment. Now, under your normal investment account, you'd have to pay tax on anything above 23,800 rand. With a tax-free savings account, you wouldn't pay any tax on that amount, right? That's completely tax-free. Now, when contributing to a tax-free savings account, you have a 36,000 rand limit that you can contribute every year and a lifetime limit of 500,000. Now, in total, if you had to contribute the max every single year, it would take you about 14 years to get to the max. So this is a long-term savings vehicle that you can use to supplement your retirement. Maybe buy a Lamborghini in 15 to 20 years if you feel like it. Or just, help out with family costs, maybe saving for your children's education, just anything like that. So yeah, that's a tax-free savings account.
Okay, so now that you've got your tax-free savings, you've been saving for 14 years, you got your Lamborghini, you're about to kick the bucket, or maybe you've already kicked the bucket, I don't know. What actually happens, what's the process of actually, administration of the estate and distribution, and receiving an inheritance? So when you die, right, what happens is not what you see in the movies where a lawyer comes in and the whole family sits down and then he reads out this Oak's will, and then he leaves his he leaves his big ass house and all his savings to the side chick he met at Cubana, and then the wife's sitting there in shock, she's like, but what about me? That's not what happens. So when you die your death has to be reported to the master. You fill in a couple of forms. If you have a will, your original will goes to the master. He's going to determine if it's valid, not valid. If it's valid, then everything is dealt with in terms of your will. If it's not valid, interstate. Like I said, I think we've discussed interstate in the prior episodes. So let's say you have a will and you die. Your death certificate, ID, some forms required by the master, and your will all go to the master. He then issues out letters of executorship. The person he issues letters of executorship to is the person that's responsible. So they'll collect all the assets, they'll open an estate bank account, they'll make sure that the final income tax is done up until date of death, and then they'll also report your death to SARS. SARS will code the estate, they'll collect all the assets. Once they've collected all the assets, they'll advertise the estate. That advert lasts for like 30 days to creditors. By that time, if they've collected all the assets, they can then draft the L&D account, which is a liquidation and distribution account, which lists assets, lists liabilities, lists any fiduciary rights, any income and expenditure, and then that goes, and also the distribution in terms, who gets what in terms of the will. The master then looks at the liquidation and distribution account. If he's satisfied, he says, "Sharp, you can now advertise that thing, to see, so that other creditors can see if they provided for." That lays for inspection for 21 days. And then if there's no disputes, then you can distribute. If there are any disputes, then you can't distribute, and you'll probably have to submit another L&D account. And that's just a rough process of actually what happens when you die. But that's why it takes about, if they tell you they're doing it in 5 months and they get it done in 5 months, then they're really good at what they do. But you're looking at 6 months minimum. That's a simple estate where people pay out quickly. People, the assets are in order. If there's a list of everything. Where things aren't in order, some estates literally last 2 years. There are a couple of estates that run for 2 years more. And yeah, that's pretty much roughly what happens when you die, and why you should have a will and have your stuff in order.
Once again, guys, and I don't just say this for the sake of saying it, but thank you so much for watching our videos, subscribing, sharing. We're 3 subscribers away from 100 on YouTube, so please, if you could just give us that push to get to 100, we really appreciate that. And yeah, stay tuned, dropping another video next week.
Yeah, and create burner emails as well, subscribe. Jokes. Thanks for watching, thanks for the support. Yeah.